U.S. stocks fell, snapping the 7-day rally in the Standard & Poor's 500 index that drove the benchmark gauge to within 9 points of its record high. Apple Incorporated slumped 1.3% as IDC predicted the company will lose market share in the tablet market. CVS Caremark Corporation slid 1.5% after Goldman Sachs Group cut its rating. Costco Wholesale Corporation, the largest U.S. warehouse club chain, gained 2% after second quarter profit rose 39%. Yum! Brands Incorporated jumped 2% as the owner of the KFC restaurant chain said Chinese sales fell less than estimated. The S&P 500 fell 0.2% to 1,553.05 at 11:58 a.m. in New York, after closing at the highest level since October 2007 yesterday. The Dow Jones Industrial Average rose 2.83 points, or less than 0.1%, to 14,450.12, after posting record closes for 5 straight days. Trading was about 14% below the 30-day average at this time of day. After setting new all-time highs for several consecutive days, the market may be a little tired, and rightly so. Brian Larson, the Chicago-based head of U.S. equity trading at RBC Global Asset Management U.S. Incorporated, said in an interview. His firm oversees $250 billion. With little in the way of catalysts, it would not be surprising to see the streak end. That being said, as long as central bank accommodation remains, any pullback should be short-term in nature. More than $10 trillion has been restored to U.S. equity values during the 4-year bull market as the S&P 500 more than doubled from the bottom in 2009, fueled by corporate earnings that topped estimates and monetary stimulus from the Federal Reserve. The Dow recouped all its losses from the financial crisis in less than 65 months, more than a year faster than the recovery from the internet bubble. Equity funds. U.S. equity funds attracted $4.9 billion in the first week of March, the most in more than a month, according to data from ETFR Global. The S&P 500 is valued at 15.3 times earnings, a 22-month high. That's still 7.3% below an average of 16.6 over the last decade. The Dow is trading at a price-to-earnings ratio of 14.1. The highest level in almost 2 years and 11% below its 10-year average of 15.8. About 85% of stocks in the S&P 500 yesterday closed above their average price from the past 50 days, according to data compiled by Bloomberg. VIX rebounds. The Chicago Board Options Exchange Volatility Index, which measures the cost of using options as insurance against declines in the S&P 500, rose 7.1% to 12.38. The gauge, known as the VIX, dropped 8.2% yesterday to its lowest level since February 2007. There's really not a lot of meat and potatoes today, Stephen J. Carl, head equity trader at New York-based Williams Capital Group, said over the phone. We've had 2 days of really not a lot of economic data. We're also just keeping our eyes on overseas and the financial community there. Technology shares retreated the most out of 10 groups in the benchmark index, dropping 0.7%. Red Hat Incorporated tumbled 3.6% to $51.22, while Google Incorporated retreated 1% to $826.39. Apple slumped 1.3% to $432.08. Global tablet shipments will surge to 350 million units by 2017 as smaller, cheaper devices gain market share and devices powered by Google include .S software gain ground against Apple's iPad devices, according to IDC. Jefferies analyst Peter Mizek cut his price target on the company to $420 from $500, citing delayed iPhone 5s and low-cost iPhone introductions due to problems with new casing colors. Salesforce, CBS. Read more. http://www.sfga.com/business/bloomberg/article/US stocks fall after 7-day rally drives S&P 500 4,348,238. PHP number sign 9ZZ2 and LB not